Hello, hello. So first of all, welcome. My plan for the webinars is usually very similar. I like to always keep it open to questions. I always like to address questions that you have, talk about charts that you are interested in, deal with trading related questions. I can of course share the charts that that I'm looking at right now. We can do some top-down analyses together if you're interested in a specific chart. Two people, Agrillo and KT, requested two charts or three, euro, gold, British pound, yen, that I will take a look at as well. So if you have any questions regarding charts, let me know. I'm always very happy to do that. The webinars are all about you. Obviously, I'm here to help you. And let's get into it. So we have, let's just go through the questions. I cannot attend webinar, okay. Would you mind reviewing gold? I think gold is a very interesting chart, so let's do that. How do I get this out of the way? Okay. All right, Zoom is set up. So on gold, we are trading around here's the 2000 round number. We haven't made it all the way to the top of this spike high. And there's also here this ultimate long-term all-time high, just waiting slightly above the current price, but it looks like we are dealing with a triple tap. You can see especially from the third to the second to the third tap, we see a lot of weakness here, just barely higher highs. And then very interestingly here, the Friday candle, this is the daily chart. The Friday candle is a large engulfing candle. Although the high is not higher than the previous high, I would still consider this a good enough engulfing candle. The momentum is huge, larger than most of the previously seen bearish candles, so very strong signal. Now you can see the last 2 days. Today we're just getting started, but the last days, Monday and Tuesday, we have very small candles. Yesterday, an inside candle. Could be a lower bounce setup waiting. So that's what I currently see. You can see here's also this very nice level. Previous resistance turns into support. The price is now trading also below the weekly pivot, which is this thin red line. So the weekly pivot is here. We are just trading at the 2000 round number. What's the action plan here? What would you make bullish? What would you make go bearish? So bearish, I think it's quite clear. I would like to see a break here below of this low, maybe a pullback, maybe a deep pullback. I think that is very obvious here for gold. Longs, on the other hand, I'm not too sure. We have this huge level here above the price, the all-time high here around 2070. This is now the 1 hour chart. We have some local highs here. You can see that. For longs, I think the only thing that would make sense is to wait for the market to get above this is the weekly pivot here, once again. It's also here, we have yesterday's highs and low, weekly pivot. I think that's the only way to think about a bullish action plan. There's not a lot of room to the upside, which is unfortunate, obviously, but nobody's forcing us to trade. We have some supply level here. And then just above, we have the big level. Yeah. So I think that's the only thing that would make sense. Katie, you didn't say what you were looking at, so I hope this helps to shed some light. But I think gold offers some really nice technical levels with the triple tap here, good bearishness, maybe even some type of weird head and shoulder with a very low right shoulder. I think overall very nice. We're trading below the pivot, but yeah, as long as the market is trading here above this level, which is roughly 1990 all the way to 1987-ish, I think, yeah, that's the barrier that would keep you from becoming more bearish overall. But yeah, very, very interesting chart. What I would do is just place my price alert underneath the area and then just see whenever it comes up how this chart looks like. Oh. The trend line is not super accurate. I don't think the trend line adds a lot of value here because we have a nice horizontal level overall, so we don't need a trend line. Hope that helped. Then you also British pound yen 1 hour. I saw that. Yeah, let's do that. Let's start in a higher time frame. So you were looking for a long, which obviously now we know was the right call. I think it made a lot of sense. Here there are some ignoring the wicks here. We see a lot of resistance here. If you would, for example, choose a line graph, you can see the closing prices in this area are giving us this very good resistance area here. So a break here, after this break here, above the recent highs, there was a very good decision or good reason to turn more bullish. So I think that makes a lot of sense to look for bullish opportunities afterwards. You can also see we have the component here of the lower bounds. You could even say this is a cup and handle, right? So here we have the cup, and then here we have the handle. The handle is always the lower bounds part, where a lot of pressure is building. Then you have the very good I would not worry at all about, here we go, about the wicks here in this case. They would not keep me out. They would not really scare me, as I talked about this in the past. Wicks are not necessarily rejections if they occur in the right context. Also, if the price action afterwards, is not really going against the wick. So really nice decision to turn more bullish afterwards. I looked at your chart. We can pull it up. It's in the trade recaps. I was not really able to, so here you can see this the 4 hour that you posted. The market took out the highs. I was not sure. I think it looks like a retracement or pullback entry that you got in. So yeah, I guess some type of retest, fib retracement, bullish engulfing, pin bar rejection. So this is probably the pin bar rejection that you are referring to here as point number 4. The candle is not fully closed, but close enough. So I think that was your entry reason. Looks good. Quite aggressive entry here on the 4 hour. Let's find, so here, this is your pin bar. Also, what I really like is the structure of the weekly pivot. You can see the red. Here's the weekly. And here we trade above it. We still trade above it now. We had another breakout pattern, or we are having another breakout pattern here with this current 4 hour candle. So overall, really, really nice confluence everywhere. The pivot is always supporting the move here after the cup and handle. So yeah, really, really interesting. Quite an aggressive entry here, but yeah, I see your rationale. The higher time frame gives you the bullish bias, and then the lower time frame is where you time the trade. What sec? Target wise, you're targeting 16798. Yeah, okay. Okay, this is good. Yeah, I was just making sure that because there is a major level up here, and see that big resistance supply led to this downward movement. So you definitely want to consider getting out well before that. Yours is 16789. So okay, 16789. So you are probably out by now. Well done. Yeah, the higher time frame really set the stage. It's always interesting to look for those big levels on the higher time frame, and when they get broken, to use that as your bias for lower time frame execution. So if you see a higher time frame resistance level, like in this case, getting broken, especially also with such a nice pressure pattern with the cup and handle, and then from there on look for continuations. Really, really nice trading plan overall. Yeah, very nicely done. I hope that helped. Gold, yeah, that's just how I see it, and then British pound yen. And yeah, if anybody else in the future cannot attend a webinar live, that's the way to still get some value out of it. Then we have a Grillo, Euro US dollar. Yeah. Okay, there's the old bearish trend line. And it seems we are in a bullish impulsive wave heading into this trend line. Let's take a look. Euro US dollar. As always, I like to start on a higher time frame. All right, so let's get rid of this. Oops. Okay. Okay. So what we have here is quite interesting. Is we have a round number here, 110, just here. Then you can see this is the February high, and the market went into it on Friday, and then we had this Friday engulfing candle. And now you can see we had a follow through on Monday, Tuesday an inside candle, although the inside candle was quite strong. Yeah, so hard to say. Again, I always like to ask myself, what would me make bullish? What would me make bearish? I think that's a good way of approaching a trading plan when you're creating it. Yeah. So what would make you bullish? I think being bullish before we take out the resistance is a little bit premature, especially seeing the rejection here with the engulfing candle. I think that is a little bit too early. So bullish, I would wait to get above this, or if you are trading on a lower time frame, yeah, I'm not sure if it makes too much sense to look for a move back into the resistance, because we would be trading against this strong Friday and Monday push with the engulfing candle. So bullish, I would be cautious turning bullish until we get above this one, 110, yeah, 110.5. I think that would be the way to go. Bearish, I'm currently leaning more bearish with the bearish engulfing candle, but I would not jump in just straight away. When we look at the 4 hour, we can see this structure. We have very deep pullbacks. You can see the bearish waves are quite large every time we see a bearish wave, which is a different trend structure, which shows that there is quite some bearishness still in the market. The market is more balanced than the strong bullish push may indicate. What we see, this is obviously the highest high. Now we are seeing lower highs. When we look at the pivot structure, what we see is that we are still retesting and rejecting pivots, right? We move into the pivot, turn above it, into the pivot, turn above it, into it, above it, into it. And now's the question. That's why I would not be bullish until we see a significant push. If the market can get below, here you can see we have 109, a round number. If we get below 109, I think that would make me quite bearish overall on this chart. Because then we have the higher time for bearish rejection. We would have the rejection of the pivot to the bearish side, which we have not seen in a while. We would have the trend line break and the break of the last swing low. You can see we are making, or this is a swing low. And if we get below that, then we would make a lower low. That's supposed to be an L. So we would have 2 lower lows. I think that would make me, yeah, that's quite a decent bearish signal overall. And then what you could be doing is, again, probably 1 hour, look for maybe a break and retest pattern, see how we trade around the lows. For now, I don't see a need to go to a lower time frame. I think for now we could comfortably stay on the 4 hour, just wait for the market to make a push. 109. There is some big news coming out later this week. You can see we still have all the PMI data, French data, German data, flash PMI. So yeah, we still have some PMI data coming out, which could be a mover. Not sure how big of a mover. So we don't have any huge news events this week. But overall, I think this is a very, very interesting chart overall. I really like the higher time frame bias here with the resistance and the engulfing candle. Yeah. I hope that helps, KT or Agrelo, sorry. So yeah, those are all the questions I think that were sent in previously. The other ones are not really related to the webinar. So what we can do now is we can take a look at other charts that I have on the list, but if you want me to take a look at a specific chart that you are interested in, just drop it into the chat. I have a few ones marked, but I would always prefer to go over charts that you are looking at anyway, that you need some feedback on. If you have any trading related question offsite, away from the charts, could it be related to the course, could be related to a trading topic that you're currently dealing with. That's also, yeah, I think very helpful for you as well. In the live webinars, we are now a very small group. So really make use of that. You can get in your personal questions. So I think that's good. Only, no, I don't think that's I don't think that I would consider this lazy at all. I have met some really great professional traders who have been trading only one strategy for years. I've met a trader who trades one very simple strategy for over a decade. I don't think there's anything wrong with really becoming well, obsessed or invested or very, very proficient and investing a lot of time into one strategy. The flow strategy at the core may seem very simple, but as you do more back tests, for example, as you keep trading it, you will notice little nuances around the setups. You can start observing the relationship between the time frames. What is a good higher time frame? What is not a good higher time frame? Does it even make a difference? So a single strategy is not always as simple as it may seem. There are so many little moving parts, and the more time you spend with a specific strategy, the more you will pick up those little nuances, and then you will learn more about the system, but you will also learn more about the price action itself, because if you're following the flow strategy, you're always analyzing very similar price movements, but you will see that those similar price movements, they will differ slightly, and then you will notice those little differences. And I think there's a lot of value in approaching a chart that way, because you become very proficient at a limited but very interesting set of price movements. I think it is definitely a good path to go down to become a specialist in a specific strategy. So I would not worry about this at all. I would just put the worry aside. I understand that it's normal that, well, when you're just starting out, you have no frame of reference probably, but I can tell you that a lot of professional traders, there are those one-trick ponies where they are just doing one thing over and over again. They have become really good at it. They know everything about their specific strategy. They know it inside out. And that's definitely a very valid approach. So yeah, don't worry. I would not worry about that at all. Euro check. And by the way, hello, Henrik. So let's take a look. We have a very nice, starting on a higher time frame, we have this nice rejection, lower low, then fake out. I really like to put this indicator on my chart. It's called daily high low. 1 second, let me turn off the rest. Where is it? Okay, and here you can see this is the yesterday's high in green and yesterday's low. And it's really interesting to observe how the market moves. And you can see we're pushing into the highs. We tried yesterday to run at the lows, but we were rejected. We didn't make it all the way. You can see the market pushed into the lows of yesterday, but was rejected. Very strong move, quite bullish overall, this push. And now, yep, you can see it. We have this very tight, narrow range pre-London Open. Asian session, quite, yeah. I don't think, yeah, this is not a very active chart during Asia, but you can see the market stayed quite high there. Quite similar to what we have seen here yesterday, right? So Looks quite familiar. What we're seeing today happened to some degree the day before that. Your check might be a chart that, because it's more of an exotic pair, might be a little bit more prone to those volatility spikes. You can see that. Also, maybe you see volatility spread spikes. So if you trade the lower time frames in general, what you'll usually try to do is stay more with the lower spread markets, which are definitely majors, but also to minors. Depending on your broker, you have to monitor the spread development of those more exotics. But overall, I think looks really interesting. Looking left, you can see we have this big high coming up. So that's definitely something you want to be aware of. But yeah, overall, especially with a nice higher time frame, the fake out here to the downside, the trap looks quite decent, I think. Yeah. Just have to be aware of this being a more of an exotic, that there might be an issue with those spread spikes, volatility spikes as well. But overall, nice chart, yeah. So if the flow strategy resonates with you, yeah, I think there's nothing wrong with getting very good at it and really spending a lot of time doing backtests. Backtest as many different markets as you can. The more you backtest and the more data you gather during your backtest, not just scrolling through past charts, but really doing a proficient backtest like what I show you in the course, with gathering data, collecting charts and screenshots, you will see a huge jump in your learning curve. You're going to be very focused on one specific part of trading. And yeah, that should help boost your learning curve quite a bit. Henrik, let's do that. US dollar Swiss. What are the main watches? Let's take a look. Start on the higher time frame. Overall, I think it's so here it definitely looks more bearish. We've just broken here this big level. Actually, you can see that it's the Wednesday, the February and March lows. You can see that break. We could run into a break and retest scenario here. We are now at 0.9. So higher time frame, I would not be super bullish. We could be short-term bullish, but you can see if we run into this, there's a high chance that, because this is support, a big support level, and now we are below this the first time since 2021. So we have to be a little bit cautious about this level, right? It could turn into resistance. We don't know yet, obviously, but we have to be aware of this level. Let's take a look lower time frame wise. Interesting chart pattern. Definitely lower time frame. We are short-term bullish. You can see we are just having this flag-like or triangle pattern. Let's see. It's just around the weekly pivot here. Just around the weekly pivot. Yeah, here we have the 0.9, which is a big round number. It's just here above the high of the flag. So you don't have so much wiggle room here if you're looking for a bullish move, because this one is coming up right away. It's quite a negative confluence. Of course, you could still try to trade through it, but just beware that, yeah, there's just a big level just above you. Yeah. Where, okay. My 50 is gone. Let me just quickly. Yeah, there's a big, here's this cluster. You can see the weekly pivot. Then you have the 1 hour 50. You have the 0.9. Big round number here. Just a lot of things coming together in this region. And then you have this level here. Yeah, but definitely an interesting one. Yeah, you can see we faked out. We spiked into this, rejected this one. There's still this huge level underneath, but yesterday you can also see we only had an inside day yesterday. So you can see we have yesterday inside day. Not a big signal, and then you can see. Hard to say. And also the problem here with those long-term daily levels, they are very hard to really pin down. You could say, okay, here's a low, but also those are often used. You can see the low here of 2 weeks ago, I think. Yeah, 5th of April. Those are levels that are often retested. Yeah, so somewhere in this region, you probably have some type of resistance zone, and then very hard. I would not be super confident to understand or to understand where or how to approach the bullish setup here. Get rid of all this. So somewhere in this region, you can probably expect some resistance. Of course, there's a chance that we might break above it, but there's also the chance that we will bounce here. So you have, if you would trade, what I would do if I would try to trade above this, if my higher time frame would be bullish enough, then you would have to try to make it worth with a high enough reward to risk ratio. But yeah, the higher time frame is also not very bullish at this point. Yeah, but I can see what you're looking at on the lower time frame. Yeah, definitely. All right. If there are any other charts, I'm always very happy to take a look at other charts for you. So we've taken a look at gold, this. Just throw in your charts that, or if you have any other trading related questions, I'm very, very happy to do that. Here's another example, by the way, similar to the British pound yen, here Aussie yen. The market broke above this area. Here's a very big resistance cluster somewhere in here. Then we broke above it. And then this could set your tone. If you see such a big level on a higher time frame, and then you see the market is breaking it with high momentum here, this engulfing candle, that could really give you a good higher time frame bias. That's always what I'm looking for. A higher time frame, some kind of higher time frame signal. It could be like on the case of the Euro US dollar, the higher time frame engulfing candle that would set my tone bearish for the next day. It could be like in the case of the British pound yen, the breakout here with a high momentum candle above a higher time frame cup and handle resistance. It could be here the Aussie yen breaking above with a engulfing candle above a long-term resistance. Those are the things that you really want to look for if you are doing those higher time frame bias plays. The good thing about this is that you have your higher time frame, which gives you more of a long-term signal. But on the short term, if we then go to the 1 hour, we could just try to capture those very short-term moves. That's what I like to, or how I like to structure my trades. You can be in and out of your trades. You don't have to hold them for an extended period of time, but you're still going with the time frame, with a higher time frame. So here you can also see we broke above it. We broke above the daily 50. I think overall, that's a very interesting scenario here. We are above the weekly pivot points. We had this break and retest that a lot of you are always interested in trading as well. So yeah, those are the setups that I really, really like to look at. You could go down as low as the 15-minute 1 hour to try to trade those. You can see we break back into the breakout level, then we have another break and resistance area, and you can see that we can really pin down the entry and the patterns. That's what we call the fractional patterns. So you can turn off the time frame, and you can see there's very small difference between the setup on the 4 hour and the 15-minute. You always see those break and retests. So that's the beauty of using those time frames together. we can really go down from the higher time frame where we get the signal, and then on the lower time frame, really nail it and find those patterns. You can see if we would have traded this break and retest on the lower time frame, even just targeting around the previous lows, we could have gotten around 2 to 1. But obviously, if you stretch your target, it's easily possible to get a much higher reward to risk ratio as well. That's why it's so interesting to combine higher and lower time frames. We don't have to stretch our targets too far. I was looking at Euro Aussie. I marked those levels here. Those are the levels of February 2022, 162. And then we had this one from August 2021. The market pushed into both, but ever since then, it has been stalling a little bit. Here on Thursday, we had this engulfing candle, but I'm not sure. I had a price alert initially, but yeah, nothing really happened. The market seems to be kind of stuck here. So I'm not sure about this one. I guess one of the trading plans would be to wait for the market to get outside of, you can see it's not even a really confirmed trend line, only if we maybe do it like that. Yeah, questionable. What I like is that we have turned the pivot structure. So as previously the market traded above the pivot, now we're underneath the pivot, which is good. But yeah, stuck between those big levels here. It's a good morning routine or evening routine, depending on how you want to do it. Go through all of your charts and mark those big levels, and then wait for the market to break them or reject them. But yeah, that gives you a decent outlook on the higher time frames at least. Euro CAD, you can see we're making those lower highs. Kind of a level here at 146. The moving average is also waiting here. I was waiting for a breakout below, which has not happened yet. The market has been in a very, very big push here upwards. So I was looking for some type of correction on the way down. Oops. You can see we are even almost have reached the 261 Fibonacci level. So very, very overextended market in general. But yeah, for now, nothing has come up. Are there any? Okay, Hendrik is typing. Euro yen is also an interesting one, just because we are moving into this level here right now. Obviously, today is very bullish so far. So for bullish signal, I would need to wait for the market to break this level. For bearish, I would see I would need to have some type of maybe an engulfing candle or something. So it's a little bit too early to tell, but I definitely have them on my watch list so that I'm aware of markets that are close to or right at important levels. But for now, it's a little bit too early here. We have some interesting lower patterns. You can see we have this upward sloping trend line, kind of a channel, but too early. I would not feel good just buying here. We would need some type of pattern, but they are interesting and definitely worth keeping an eye on. Regarding trend reversals, when looking at structure, changes, turnarounds, I'm constantly seeing that there are all the confluence I'm looking for. Example, trend slowing down, double top, breaking last, pivots changing course. And I go into the trade just to see it's a bit larger pullback in the trend without a significant level in the way. And now I'm doubting every level all the time and looking for a new good level with confluence. Yeah, trend reversals can definitely be a little bit more challenging. Do you have an example maybe of a current one that we can take a look at? If you have a chart setup, or just let me know what market maybe, then we can take a look at. But that's why I'm such a big proponent of the multi-time frames, because even so, assuming you trade the Euro US dollar reversal here of after this engulfing candle on a daily, if you go down to something like a 15-minute chart or something, then even this small follow through afterwards will typically give you a good enough move on the lower time frames. The problem is if you try to trade this directly on the higher time frames, or maybe even just daily 4 hour, there's usually not enough room here to make this work. But if we go to, let me move this out of the way. Oops. Yeah. Although this is the engulfing candle up here, but then if you see maybe down here, it's not the best example, but you can see on the lower time frames, we could have definitely tried to make it work much better than if you would go from the daily to the 4 hour. You can see there are just barely a few candles. That's why, first of all, trend reversals are definitely more challenging. That's absolutely right. And second of all, this multi-time frame approach is definitely the way to go. And you want to go from a higher time frame to quite a lower time frame, so that you can get a much narrower stop loss in and still make it work with a good enough reward to risk ratio. But yeah, they are definitely more challenging. That's why I think this the flow strategy, for example, resonates a lot more, or can be a little bit easier to trade in the beginning, because it's more of a conventional trend following strategy where you look for a push and then trade into the push. But yeah, trend reversals are a little bit more trickier. But if you are in the mindset of trading this slowdown, you could also go or you could also trade it in a trend following context. You don't have to wait for the market to turn around. But what you could be doing is, for example, what we see here, we know that we are here in an uptrend, then you have the pullback, and then this would be here the third leg, or the third arrow would be more of a trend continuation. And you can apply the same things to such an approach. You look for, here we have a triple bottom, you look for momentum to slow down, and then you try to get into a bullish trade, which is more in the line of the overall market. So that would be another way of approaching this type of trading, where you're not going really against the long-term trend, but you look for the end of a correction wave and then try to go with the trend. This might not be the best example, but it was just on my screen. Here it is. Here you can see we're on the 4 hour. We look for the market is above the weekly pivot structure. We see we are above the 50 moving average. And then what you could be doing is you look for pullbacks back into the moving average or back into the pivot point. Here you can see we have something here slowing down. And the second circle, you can see we are having this double support, retesting previous resistance. Then you can see we have slowing down inside candles, moving higher. Then the next push comes back into the moving average. Here we reject the pivot, engulfing candle, and that could be also. So you can see you could also approach the higher time frame. It's not a trend reversal, but it's a correction wave reversal, if that makes sense. So I think there's some videos in the course as well where you look for pullbacks into the higher time frame moving average or the higher time frame pivot point structure, and you try to trade that in line with the trend. So we are now on a 4 hour. You could look for those signals on the 4 hour and then go down to 15-minute, even maybe all the way down to the 5-minute, and then see how do they look. You look for patterns in here. You can see what we could be doing is breaking retests. You can see on the lower time frames, you preferably want to work with maybe the daily pivot, if it makes sense. Here you can see that was the first signal of the double support. You could look for the structures that I marked or that I explained in the course. Break and retest, dirty pullbacks. I think there are also a lot of opportunities if you're not such a big fan of those trend reversals on the long-term scale, look for correction wave reversals. So you determine the trend direction on your higher time frame, and then you wait for the pullbacks on that time frame, and you trade then into the long-term direction. Still, the same concepts would apply. You can use tools that you mentioned, pivot points, moving averages. You could even look for those patterns. Sometimes you will get a double top, double bottom. Engulfing candles are very, very common to see as those pullbacks slowing down, deceleration inside candles. So I think that would be also a different twist, but on the, very similar approach overall, but you're going with the trend. And then you could stretch your targets much, much further. But yeah, trend reversals are generally considered a little bit more, well, difficult, just different because of the different characteristics. Yeah, but those break and retests happen fairly often in a good trending market. This is the 50 EMA, which is a moving average that is often retested. You can see that during a trending market. You have here double, triple bottom here. You can see support turns resistance turns into support at those moving averages. So that might be something to look into as well if you like this approach, but not in the classic long-term trend reversal. Any other questions? Charts that you would like to take a look at? I see Tanapon is, and Henrik, let me know if that makes any sense or helped clarify, gave you some new ideas. Okay, gold is breaking, so that's interesting. Still a little bit until the candle is closed, but then we can start looking maybe for pullback opportunities later. Maybe some type of dirty pullback. Okay, cool. Just, you can try it out. I will try to make a webinar weekly. This time is a little bit chaotic around here, but yeah, I will try to make it a weekly occurrence. So you can check back in with me next week. You can try it out. Of course, you can also, if there's not a webinar, you can always post it in Discord and get some feedback. British pound Aussie. Let's take a look. What is your higher time frame? So let's turn on the weekly pivot. Okay, around the weekly. So the first thing that is quite jumping at you is that we broke out of the resistance, retested it here a little bit. Yeah, looks quite bearish, quite bullish. We're going definitely here with the trend. The market has not made a change, so we are still always making higher low, higher low, higher low. That's something to keep in mind. Let's go to a lower time frame. You said 1 hour, right? Yeah, 1 hour. Okay, we have some type of pattern here. Retest. We have this level. There's some support. Here we have a supply or demand area. Yeah. You're trading a little bit here in a sideways. You can see we definitely saw a little bit of a bearish push. but the market made already here this trap pattern, kind of, right? I think it's not totally, it's not a completely a bad call. You're going definitely against the higher time frame bullish trend. We had a good bearish candle here, so yeah, we still kept making higher lows, which is not super ideal. I would say it's just a very high risk trade to get in here. It bounced exactly where you would expect it to bounce, you can see. So if there was a bounce, I would expect the market to bounce either at the previous low, which was here this fake out trap pattern, or here the demand area. Did you manage? No. Yeah, you had very little room to manage it. Then you get your inverse head and shoulder against you, right? Left shoulder, head, right shoulder. And the breakout, yeah. I would say it's not a, I can definitely, sorry, I can definitely see why, or I can see the rationale behind the trade. Probably a big factor was the huge candle here on the daily. I'm still, yeah, going against the higher time frame is always a little bit risky, obviously. So there, the risk factor is definitely there. Yeah, I would say it played out as, yeah, it's not a surprise how it played out, bouncing here, going back into the, or not following through on the trend reversal. I think it's overall nothing completely wrong with the trade. It just, I would say, just didn't work out. If you keep taking those trades, obviously, I guess you would have a trading journal. So make sure that you, if you mark them against the higher time frame trade, over time you will see the data on it, and then you can see if those types of entries are a little bit too aggressive, then you have to reevaluate. Also, what you could be doing is, instead of, because you are going against the trend, and then you have a very, very aggressive entry on the lower time frames before the market was able to take out a high, a low in this case. So what you could be doing is also wait for the market to take out the low. That might give you a little bit of a less risky entry. Obviously, the reward risk ratio will go down slightly, but it could help you avoid those very aggressive against the trend entries. So getting in when the market breaks the low, but obviously you are giving back your reward to risk ratio. But you can see we're just having this very nice resistance here. Then we break out, retest it, and then we'll break out this high, retest this high. For a, I think also, Henrik, that's more interesting. For a long-term trend reversal, what you want to see is more of a long-term structure. I talked about this with Moritz before, because he is more of a conventional trend following trader. And what he said, that if he trades those long-term reversals, then he wants to see more of a broader pattern. So for example, for him, it would not be enough to just see an engulfing candle on the daily, and then, even though it's completely against the long-term trend, and then short it. For a trend reversal, he would need to see a broader pattern, a triple tap, for example, or a broader head and shoulders, for example. Those long-term patterns, they are they show a longer unwinding of positions. There's more, when you go through the course, this is what I would refer to as distribution or accumulation, where if you see a market turn, a long-term market turn, you want to see typically a longer sideways correction, whereas just seeing an engulfing candle is typically not enough bet on for a more prolonged reversal. So that's something that you could also keep in mind. So triple tops, triple taps, head and shoulders, those are more of the long-term patterns that lead to reversals, whereas just going with an engulfing candle on the higher time frame might be quite aggressive. In this case, as I've shown you, Henrik, what would be more probably in line was, because we are here in the bullish trend, we see here previous resistance turn into support. Then here you have your engulfing candle, and then look for short-term moves into the trend direction. I think those plays make a little bit more sense. You could also use the flow strategy component of that. So this could be Patrice, or is it Patrick? Patrice. You could use that, for example, on top of or in line, in addition to a flow strategy component, where you have your higher time frame scanning process as well. So you can see then your flow strategy can morph into different things. You can change it, advance it if you think that's an advancement. So, yeah. Anytime. So I think from next week on, I will try to do it weekly in the webinars. And I think maybe what we can do is also try to change the time slot a little bit to maybe the beginning of New York session. I would think about it, maybe do a vote here to see if more people would be able to join. I think it's always good to have more people live, gets a little bit more interactive. A bit out of scope question, but based on your experience, what is the best way of identifying and avoiding ranges, consolidations? I'm testing some indicator-only strategies to code and test, but having a rough time to avoid ranges. Yeah, that the channel is, yeah, that's the first thing that came to mind. If you want to go only indicator, the ADX is designed to do that. You could use a ADX threshold. So for example, wait for an ADX above 20 or 25. Bollinger Bands are also quite interesting for that. So in a range market, you see that the Bollinger Bands are narrow. But I think the channels are typically probably the way to go. Another very similar thing to the moving average channel is to use a Bollinger Band channel. So what you can do is try to set the Bollinger Bands to 1 standard deviation instead of 2, and then it also becomes a channel, and then you will often see the market trend outside of the Bollinger Band channel. And in a range market, you will see that it's more inside of the channel. Ionu. I've never, what is that? JPYWCU, what is that? Oh, okay. I've never even seen that. Is it like a index or what? Let me just wait for Henrik's reply, and then we can move on to the. Okay, fair enough. Yeah, I think the channels are very interesting use case for range markets. Yeah, Bollinger Bands also quite interesting. All right, so top down. Okay, what we see here is a resistance at the top, support at the bottom. The market is clearly inside of this range. It's narrowing the low end. So what I always ask myself, bullish, bearish, neutral. Would I be bullish right now? Not really. You can see the bearish candles are much larger. We keep breaking previous lows, retesting support as resistance. So bullish, I would not feel comfortable until we reach this area and then see some very clear bullish signs, maybe a fake out, maybe an engulfing candle. So bullish out of the picture. Bearish would make a lot more sense, but the first bearish target would be here. So we might not have a lot of wiggle room. I already see here, yeah, very interesting breakout pattern, but this opportunity has already left building. You can see nice rejection of the daily pivot. We have this nice breakout here. This is the daily high-low indicator. Narrow, you can see yesterday we have a very nice narrow range. Then we broke out here earlier today. Lower bounce. This is a pattern that I want to make a new strategy module about. This is something that I think I've hinted in the past. This happens quite often. You have a very narrow range. Then the lower bounce breakout. I think that's overall quite interesting. Yeah, so bullish, I don't see a case for bullishness at all. Bearish, I would say the bearish setup is playing out right now. But you can see here, this is the low of the range. So I think that would be the first reasonable target. Or not first, but probably the ultimate target for this signal that we are seeing on the higher time frame right now. Does that help? Very welcome. Interesting. I've never seen. Can you trade this on a broker, or do you use it as a reference point, just like you would use the British the dollar index? But you can see the yen weakness across the board. You can see we talked about British pound yen earlier. We talked about euro yen here being at the resistance, Aussie yen breaking out. So yeah, okay. Okay, fair enough. Interesting. Yeah. So we definitely see the yen weakness as we've seen here on the markets that I've talked about in the past, or well, in today's webinar. So yeah, interesting. I think we covered a lot of ground. So I'll try to post like a poll for or vote for next week's webinar time. Maybe New York Open will make more sense, so we can get more people in. And then we can see. I like to have more interactive webinars. I think today was still fine, but if we get more people in here, it's often a more lively interaction. We can take a look at more charts, get different viewpoints in. And yeah, but I liked the webinar. I hope you got something out of it. We covered quite some ground. From next week on, I think I will try to be a little bit more active. I'm just dealing with a